This is your LMAX exchange technical update for Friday, September 2nd, 2016. Euro dollar. So the euro has been bid back up in recent trade, though overall, since breaking back down below the 100-day moving average, the pressure does remain on the downside, and there is risk for another lower top ahead of the next major downside extension, eventually back towards key support at 109.12. At this point, only a break back above the recent highs that we saw on the 18th of August, which come in at 1367, would negate the current bearish outlook. Sterling dollar. So cable has been bid up in recent trade, but here the market has been locked in a bearish consolidation, and this bid has only been classified as a correction ahead of what should be a resumption of the broader downtrend towards those plus 30-year lows and below, exposing the 125 area next. At this point, only a daily close back above 133.72, that high that we saw on the 3rd of August, would negate this outlook. Dollar yen. So dollar yen is trending down, and it's clear that the market is now looking to put in that next lower top following a nice correction ahead of a fresh downside extension back below the recent 2016 and multi-month low at 98.99, exposing the 95 area. At this point, only back above 107.49, the high that we saw on the 21st of July, would negate the bearish outlook. Euro Swiss. So Euro Swiss has been bid up in recent trade, but overall here the market has been mostly confined to some range trade, with rallies towards 110 well capped and bids and dips down towards the 108 area well supported. So we have seen another rally up towards 110 on Thursday, but the market is expected to once again stall out in favor of another retest of that range low in the 108 area. We would need to see a close back above 110 to really compromise this consolidation outlook. Aussie dollar. So Aussie remains under pressure overall despite some gains that we saw on Thursday trade, with the market now fixated on a retest of next key medium term support at 74.21. That's the low going back to the 27th of July. A break below there will then expose more critical support at 71.45 further down. At this point, only back above 77.58 would negate the bearish outlook. Dollar CAD. So dollar CAD has seen a little bit of a setback in recent trade, but overall the market is carving out a major bottom, and there is risk for additional upside beyond the peak that we saw at 32.54 going back to the 27th of July, exposing a move towards 135 to 140 further up. At this point, only back below 27.64 would delay the bullish outlook. Kiwi dollar. So Kiwi has been consolidating after recently putting in a fresh 2016 high at 73.81 in the previous week. At this point, the market is expected to trade lower after stalling out, but we would need to see a break and close below 72 to get things going to the downside. Until then, there is risk for another run to the top side and retest of those 2016 highs at 73.81. SPX 500. So the S&P 500 is showing signs of potentially rolling over, but we would need to see a break and close below 21.47, that low that we saw on the 2nd of August, to accelerate declines, to strengthen the outlook and accelerate declines. Until then, dips could be supported, and the market could be overall pressure to the top side in favor of the next major push to fresh record highs beyond 2200. Gold. So gold saw setbacks trade down just shy of 1300 on Thursday, and the market is exposed to potentially another setback towards the 100-day moving average, which comes in just below 1300 at the 1296 area. At this point, though, setbacks should be very well supported as this market carves out a longer-term base, with a higher low now sought out ahead of the next major upside extension beyond the 2016 peak that we saw, going back to the month of July around 1375, and then towards 1450 further up. Again, really only a close below the 100-day moving average would delay but not negate the constructive outlook for gold.